guys, welcome back. Let's take a look at Tezos. As you see here, I've got the weekly chart behind me, and as we remember speaking about here, these patterns more often than not don't work out. And as you can see, the Adam and Eve thing that we drew on here so far has not been working out. Now, of course, does that mean that it's been completely invalidated as yet? No, I wouldn't look at that way on the weekly time frame until we're starting to, move back up above 30,000, at which point then you could then start to be looking just towards the normal sort of traditional trading here, sort of clear away the drawings for now. Low, high, higher low, higher high, higher low, right? That's what that would be. So what we kind of hinted at could be the case overall for quite a while if this were to pan out the way that we were kind of hoping that it would. And so far it's doing what we've been hoping it would do. Of course, there's a lot of caveats to be had in there. We're still below 2,800. You know, we were up above 2,800, actually up as high. Let me go down to the 24-hour time frame so I can show you here, because we're up at 2,900 earlier on. And that's where you need to see the prices moving up to in general. But as in terms of this move so far, if this were to continue to be a downward trend overall, and were to retrace down the way, bear in mind here you've got this higher high on the RSI and the stochastics and the DMI down below, while the price action would be putting in a lower high. So if you don't know what that means, check out yesterday's video that I published called Hidden Divergence. It's in a new playlist called Education. I don't think it's visible on the playlist isn't like on the channel homepage. You'll have to edit that. But anyway, I've got a video called Hidden Divergence that I put out yesterday. It explains all of that to you. In general, what we're looking at here is just to be clear, is the horizontals really. We're looking towards that 2,900 area for where we would be going up above this high in general, then towards the 3,200 area. So we could go above this high and really say the trend is turned around. But just to go back over to where it feels good again, the weekly time frame, you know, in general, we have this upward, I've said in general far too many times, we've got this overall upward trend here, and hallmarked by these higher lows and higher highs. So what can we see looking at the oscillators down below? But well, we have this downward shape here on them. So you've got this high here followed by another high which was higher than it, which is clearly bearishly divergent across all of the oscillators there on the charts. But what also you can think of in terms of this, should we actually manage to regain strength and have come down here and to consider this to be oversold as part of an upward trend looking towards the neutral line. This is Bitcoin, by the way. We'll be going on to looking at the dollar pairing in a second for Tezos here. You could be looking at this and saying this was the oversold area. You could be looking at this downward thing and saying that we've got a downward trend line on the go, and you could be drawing this in. I think the people that are long-term Tezos investors are going to love this little section of the video, and you could be looking towards how this is lining up very neatly with where we are right now in the prices, and should they move on towards those targets there, you'd be moving up above this. This is a fallen wedge, which is a statistically bullish pattern. So despite the bearish divergence that we've had as part of the price action going towards the top side, the counter sort of argument to that, which makes a lot of sense, is the sort of the bullish divergence aspect, which could, you know, take you as far as the overbought zone and up towards, you know, bullish targets towards the top side should we get a run up there, and that would be visible on all three of those oscillators down below. Overall, that could be a good thing. So I think that's more or less where I'm going to leave it for today's episode. You know, in general, I quite like doing comprehensive episodes where we tell you everything you need to know, but I appreciate that that's too much to digest for most people's sort of attitudes when it comes to, you know, adopting the trading mentality that we have here as Rocky Outcrop practitioners. Okay, it doesn't happen overnight, and that's fine. So telling you everything in the one episode is kind of implies that it should happen overnight. It doesn't happen overnight. That's totally fine. Take your time about all of that. But so I'm going to kind of leave the Bitcoin side of things at that broader type analysis there instead of diving down into any more detail. And I hope that that means that overall you get to take away a bit more value from the episode. And then as a result, want to subscribe to the Rocky Outcrop Society here of Crypto Technical Analysis, which is all FOMO free. We've got 964 subscribers here as part of the family. You could be part of that final 36. Do it, you know, bring us up towards these heady heights. Thank you so much for tuning in. Let's look at the dollar pairing. So while the story is not that different, story is certainly not that different here. I think that the thing that jumps out at me right now is that you've got two things on the go at once, right? The price action's come up to 268, great. 269, that's right at the 236 here, where we could be invalidating the Fibonacci that we spoke about in the previous episode there, and that's what we would want to see, going up above that 236 area. Of course. Now, that means that we'd be going up above the 50% area, which is a common retrace area for the prices. So there's a dynamic here on the go, and looking up towards the golden pocket zone where we really want to see the prices going to, that's kind of where you would need to see them going in order to avoid having hidden bearish divergence on the chart, because we have to bear in mind that this is still a downward trend until such times as we've gone above 270 or 280 into the 618 area. By the way, if you hear a constant noise, it's my neighbors drilling. They've been drilling for the last, I don't know how long, 70 billion years. But so then you would have hidden bearish divergence. Hidden bearish. Did I say hidden bullish? Because I'm certainly meant to say hidden bearish. This is a bearish trend that we're looking at. A hidden divergence is continuation divergence. Watch that video that I had yesterday about hidden bearish divergence, or hidden divergence, sorry, and you'll see here that that's what we have there if the prices do not manage to actually make it up towards these lofty heights, such as the golden pocket zone there. Somebody asked me to do a video explaining the golden explaining all this sort of stuff in a bit more detail. Really, you could get a lot of value out of the last couple of episodes if you're looking for that. And I linked to a video by Tradespawn, great guy, good videos, telling you all about the Fibonacci's as well, Fibonacci as he calls it. And yeah, so you know all about that anyway, but maybe I'll consider doing one of those videos for the channel as well soon anyway, just to let people know. But you know, that's what I'm looking at the minute. That's the question that I'm asking. I'm not really wanting to go on about anything particularly, just to keep the episode fairly digestible, like I spoke about in the Bitcoin one. The same scenarios that we're talking about in the Tezos to Bitcoin world can be, of course, spoken about here too. Quick reminder for folk that well, actually no, screw the quick reminders to folk. Let's just do another thing, another little bit of difference, you know, just to give people another perspective on things. Now, bearing in mind that I'm looking for something here, bearing in mind that I really love this coin. I'm not trying to bring anybody down or do anything negative or any of that sort of chat. Just to bear in mind that, you know, you can quite easily get, if we look here, you see that what I've done here is I've taken the parallel channel tool and I've drawn in a line starting up here in some wicks, going down, making sure I hit this wick and making sure I hit the wicks of the current price action. And now I can spread this towards the downside and just drop it on there and see that we've got this wick here and we've got this wick here and we've got this wick here coming down and showing us that we've got this channel. So, you know, if we do break out of this thing, then we could be looking towards the top side for more continuation towards there, and we have the key areas such as 280, all these areas that we've spoken about in the recent past to look to as well. So there you go. If we do see the prices drop on down the way, then the downward side targets 259, 252, and 245 would be the easiest ones. Rocky Outcrop have managed to profit greatly from watching this channel over the last wee while, because people were able to use this as a good buying opportunity. As we said, when the prices were up here and up here, but you could get good buying opportunities there and there as we were talking about them. So I think overall we kind of like, you know, we've really kind of done all of the hand-holding aspect that we really need to do, and that this being a broader level, kind of more discursive episode, it's definitely got as much it's got a lot of good value in this for people to take away. So I really do hope that you hit that button and help grow the channel up to the 1,000 subscribers number. Thank you so much for tuning in today. My name's been Rocky Outcrop. It'll be Rocky Outcrop tomorrow when I come back and, as ever, do another daily value-filled, FOMO-free, greed-free technical analysis episode that integrates really nicely with whatever you're looking at too, just to provide you with a bit more of that holistic context. Thanks so much for tuning in. I'll see you again tomorrow.